CEO Mythology expands stock multiples. And as you see, we have different CEOs up here: Bezos, Jobs, Elon, the guy, the CEO, the young CEO who runs Red Lobster now, Bill Gates, Zuckerberg, the guy who runs Lowe's, and Ryan Cohen. And so the reason why I bring up these CEOs for this topic is a lot of these CEOs, their how they've carried themselves, their aura, their swag, those have expanded their stock multiples, their prices, and the prices people are willing to pay per their earnings because of what they stood for, their capabilities and such. And a lot of these CEOs here have shown an ability to give shareholders value. Jeff Bezos, Amazon. People have been willing to pay up for Amazon because they know he was going to do what was necessary to become the biggest company in the world, one of the biggest companies in the world. Steve Jobs, again, with Apple, creating products, creating narratives. People bought the stock at higher prices because they believed what the CEO was saying. See, Elon Musk, same thing with Tesla, providing a story. Bill Gates, Zuck, Ryan Cohen with GameStop when he came over from Chewy. He took it up when he came over. The stock went up over to $300 because of what people believed what he was going to do. And so let's talk about what a stock multiple is in regards to expansion, okay? In stock market investing, multiple expansion refers to an increase in a company's valuation multiple, most commonly the price to earnings PE ratio, without a corresponding increase in earnings. It means investors are willing to pay more for each dollar of earnings than they were before. And a lot of that comes from because they believe in the CEO and they have faith in the CEO that though the CEO is going to do what is needed. A company's stock price is often expressed as a multiple of its earnings per share, EPS. If a company's PE ratio increases from 15 to 20, but its earnings stay the same, then the stock price has gone up purely due to multiple expansion. And there could be a lot of reasons for that. And usually it's because of the CEO providing a certain story, a narrative that people can get behind for those future earnings, right? If there was no increase in earnings that day, but the multiple expanded, something had to trigger for investors to say, you know what, I'm going to pay more now. And so why would a multiple expand? There's a couple reasons why. Investor sentiment improves, more bullish, as I just talked about. Lower interest rates makes future earnings more valuable. It doesn't cost as much to borrow. Higher growth expectations. Investors expect the company to grow faster in the future, which is possible. You can be a mature company, but also find a new growth avenue to take you up even further. Example, right? Coca-Cola, for like its first 70, 80 years of its life, it only had the original Coca-Cola. Then it started to get into diet. Then it started to get into different flavors. And those are all things that helped grow the multiple because it was growing earnings. The same thing could happen with, for Apple, for example. It's a mature company now. They still make a great product in the Apple iPhone and MacBook, but it's so mature already. They need something else if they want to kickstart their growth again. They're thinking that Apple Vision goggles, that might not be it. That might be self-driving cars, maybe not. But that company is looking for somehow to revamp growth, right? And that's where their multiple again could start to rise. Better macroeconomic outlook or industry outlook. If people believe that things are going to get better for the industry in general, they'll pay higher. and lower perceived risk, more confidence in the company's business model. So say if the book value of the company rose up and maybe not earnings rose, but their book value rose up, maybe because they have more assets, they've cut debt somewhere, that cuts the risk. And so that's why another reason why investors would buy more, which could raise the price multiple. And so for some gematria, we have mythical, good CEO, good stock market, all equally 37 in reduction, which I think it all aligns, right? You know, these are all a lot of them up here: mythical CEO, mythical CEO, mythical CEO, mythical CEO, mythical CEO, mythical CEO. Red Lobster's not a private company, but you know, he did turn PF Chang's around. He's only like 35 years old. So he's building his own mythology, even if it's not a public company right now. In the CEO of Lowe's, I mean, he doesn't have as good reviews. So this could be on the downside. If people don't believe in the CEO, that could hurt the multiple because they see more risk. Their macroeconomic industry outlook's not as bullish as before, so it can go multiple ways. But for a stock to expand with multiple, with your earnings not increasing right then and there, you have to have a good CEO that people believe in. Some more gematria. CEO mythology raises stock price, and hero type CEOs raise stock prices. They both equal 137 in reduction, the 33rd prime. So, you know, again, having a story behind your name. Another CEO that's building mythology right now, Anthony Noto, SoFi. I'm heavily invested in SoFi, and he's building up his narrative. He's building up his mythology, and soon, which it hasn't added to the multiple expansion yet, soon people are going to start buying more purely off that fact because they believe he's going to take the company where it needs to go, even if it's not there today. And that's what all these CEOs, most of these CEOs have done up here. For a stock to expand its multiple, retail investors must believe in CEO's mythology to buy. Very powerful decode, 333 in English reduction. Let me say that one more time. For a stock to expand its multiple, retail investors must believe in CEO's mythology to buy. 333 English reduction. Expand the price to earnings ratio, which is a very powerful decode right here. We have that 333 English ordinal, 153 in reduction. And we have investors create a CEO story, 333 English ordinal, 153 in reverse reduction. So you have that 333, 153 combo popping up. And, you know, I think it's true. I think I've seen it played out. And the CEOs that allow the investors to create the story are the ones that have the best results. The CEOs that try to tell how investors should feel and think like that, they don't really work out because they're trying to force something that the investors don't believe. You have to let the imaginations of investors, especially retail investors, to run wild, because normally it's to the upside regardless. We all want to see something go to the moon. So you allow your investors to create the story, and you only come in to confirm things, or just to provide more clarity onto that narrative, right? And so retail investors like hero CEOs, 331 ordinal, 133 reduction. We have stories, which is basic stories. I've talked about this a lot. 33 reduction. One of the most simple, most powerful decodes. Stories. 333 reduction. Jesus died at age 33. Though think about the whole story behind Jesus, resurrection. It's been a story talked about for thousands of years. 33 vertebrae in the back. And then we have, again, based off the 33rd prime, 137 storyline, 137 ordinal. A stock market, 137 ordinal. So it all aligns: storyline, stories, stock market, mythology, all these things that all plays a role in a stock market, in a stock price, right? In a company stock price. Um, you would hope most of it's real. You would hope it's not an illusion. But it could be. It could be to the downside as well. But that's the game we play. So that was just a quick little slide on how CEO Mythology expands stock multiples. You know, the book value could be one thing, but it could be traded well above book value if you have a good CEO in there and people believe in that person.